Nigeria tumbles from 9th to 18th in Africa investment rankings. Seychelles and Mauritius have once again secured the top 2 spots in the RMB Where to Invest in Africa 2025-26 report, cementing their status as the continent's most attractive investment destinations, despite their modest size. The island nations outranked larger economies, with Egypt, South Africa, and Morocco rounding out the top 5. RMB described the duo as small but appealing markets that continue to punch above their weight in investor appeal, thanks to stable governance, business-friendly policies, and strategic positioning in global trade routes. The report paints a picture of a continent in flux, where geopolitical shifts, policy reforms, and redirected capital flows are redefining economic engagement. Changes in the political and subsequent policy environment, alongside declining foreign aid and the redirection of global capital flows, are reshaping how African economies engage with the world, RMB stated. While rankings tend to remain stable, owing to slow-moving fundamentals like industrial structures and population dynamics, several countries experienced significant movement this year. Standout climbers. Côte d'Ivoire recorded the most dramatic ascent, surging 8 places from 16th to 8th. The West African nation benefited from expanded electricity access and a booming domestic processing sector for cocoa and cashews, key export commodities now adding greater value locally. Zambia climbed 5 spots to 20th, defying severe drought and power shortages. A rebound in copper production, fresh mining investments, and successful debt restructuring have eased fiscal pressures and are expected to lower risk premiums and revive investment appetites, according to the report. Tanzania and Angola also posted strong gains, moving up 3 and 1 place respectively, reflecting improved macroeconomic management and resource sector momentum. Notable decliners. Nigeria, Africa's most populous nation, suffered the steepest fall, tumbling 9 places from 9th to 18th. Persistent currency depreciation against the US dollar and soaring inflation eroded investor confidence. However, the report struck an optimistic note, citing ongoing reforms and a recent GDP rebasing that revealed a larger than previously estimated economy as foundations for future recovery. Senegal dropped from 14th to 17th amid a year of political turbulence that tempered growth forecasts and dampened sentiment among international investors. Regional FDI trends. Separate data from the United Nations Conference on Trade and Development, UNCTAD, underscores the uneven distribution of foreign direct investment, FDI, across Africa. Total FDI reached $97 billion in 2024, up 75% from $55 billion in 2023. North Africa attracted $51 billion in 2024, down 27% from $70 billion in 2023, reflecting project delays and regional instability. West Africa saw inflows shrink slightly to $15 billion, now 7%. Central Africa recorded modest growth to $8 billion, plus 13%. East Africa rose to $13 billion, 112%. Southern Africa posted a healthy $11 billion, plus 44%, buoyed by mining and renewable energy projects. Looking ahead, RMB emphasized that while short-term volatility persists, structural reforms across the continent are laying groundwork for sustained progress. From Côte d'Ivoire's agro-processing boom to Zambia's mining revival, pockets of resilience signal opportunity for discerning investors. As one analyst noted, Africa's investment story is no longer just about scale. It's about agility, reform, momentum, and the ability to turn constraints into competitive advantage.